Thank you. That time of day that we all pay for all the run, pull out paper calls. That time of day, see the cotton can scatter, so many colors in the night. We could give God's a love, say the goodbye.
Good morning, everybody. Happy Friday.
I'll share my praise. Another day, see, it's coming on away. So that time of day. That time of day. And the bonds that are in a vision, feeling courageous. That time of day. And we take a leap, hand in hand, pray. In this moment we can stay. Say the goodbye. Till I see you. Share my praise. Another day, see.
Good morning. We'll get started here in about 6 minutes. Really watching the 5, 10, 30-year bonds and notes. I know we have them on a large time frame. Looking mainly for the break to the downside. I dropped to a smaller time frame to look for some entries. We'll set those up. Let's get them out there.
That time of day. That time of day.
Need to drop down to a smaller time frame, find a way to get into it. Mainly because I don't want to risk too much on it. And the 30-minute chart just now triggered.
That time of
Finish getting it set up.
Order Hill.
All right. Got about 2 minutes. Make sure you're looking over what's in the news. How's it make you feel? Bullish or bearish? Economic reports coming out are pretty light, but we do have four Fed chair speakers coming out. No, three, excuse me. A lot of good information in the pre-market tips and what to look for. We'll cover that once we get started in about 2 minutes. All right. Give me just 1 second here. I do adjust the thermostat. Okay, good morning, everybody. Happy Friday. As we get started, a couple of things I'm looking to participate in. Let's get those right going first, and we'll come back and do a little assessment of what the pre-market is, get our day set up, and look at what we can potentially trade. Okay. So right off the bat, as we go through the equity indexes, I want to point out that S&P is an inside day. Okay. Now, in our prep work, we did talk about what an inside day is and what happens with that. Okay. So indexes are starting off as an inside day. Inside day occurs when the Globex range is inside the prior session's range. This is important market condition where the Asian London sessions in a small trading range leads to the New York session to be more active towards the London close. So what time does the London market close within the New York session? Yeah, it's about noontime. Okay. So other conditions that we look for on an inside day is the gap fills, the 5 p.m. gap fills. We also look at market volatility, maybe a little bit more whipsaw, choppy. So we look for zone entries only, supply zones, demand zones. Breakout trades often fail. Okay. Now, these are things I keep repeating over and over again because it's not only helping you see the picture, but it is helping me remember what type of trading environment it is and how to exercise more caution during these times. A couple other things that occur. Excuse me. kink in my neck here. Uh, is that again, no breakout trades. We're looking for zone entries only. We often see the gap fill the same trading day. And we also have more choppier market conditions till we get closer to the London close. Okay. Now there's still going to be some volatility and some price movement between 8 a.m. and 11 a.m. where banks and institutions come in and complete their order flow. Okay. We're also going to take another moment here and look over at the Dow 30 stocks. And we got Caterpillar up $7, only on 16,000 shares traded. Okay. Notice the very light volume on the big gainers. Okay. Now, what that implies is that we might not see much follow through, but it also implies that there's going to be more price discovery. And what the gap up means is they're looking for sellers, and what the gap down is they're looking for buyers. Okay. Look at the light volume. Get comfortable with documenting the volume in the pre-market and know whether that volume is lighter than normal, heavier than normal, or just normal. Okay. Watch for how the prices or how the total volume starts to increase or decrease over time, leading into, like you might see a downtrend, and then all of a sudden you see a lot of heavy volume come in. Okay. Might signal the end of the downtrend, or an uptrend where you start seeing a lot of heavy volume come in. Even though prices may be up or down, inverse of what you're looking to trade, the heavier volume implies more banks and institutions involvement. Right now, the banks and institution involvement are pretty light. Okay. Uh, Actually, I'll get to that one in just a moment. We'll look over at the other equity indexes. I just wanted to preface, why we look at when that Globex range is inside the prior session's range. It sets the tone for the better trending trades will happen a little bit later in the session after the opening. Okay. Unless price suddenly drops on news or economic event, a tweet or something, uh, price will drop into demand zones. We want to take the opportunity to participate. Okay. So we do have an unfilled gap on the S&P from yesterday's close. Often these unfilled gaps get filled within a few days. We also have another one down around 6,900 level. Okay. We have 6 Dow stocks that are negative over 94 cents, and we have 7 that are positive. Okay, now why does that matter? When we take the positive over 94 cents and we take the negative over 94 cents, we net the result. So with what I just posted out there, we got 8 positive and 7 negative. That leaves a net result is 1 positive. Take that number, multiply it by 2 to give us a value of cash market. Remember, stocks are the cash. Futures are derivative. They follow the cash market. Right now, the cash market says, hey, you should be at fair price, should be positive 2 for the S&P. Well, the S&P is positive 11. So S&P is 9 points overbought relative to the cash market. Okay. Well, when futures are overbought, we're looking for an opportunity to sell in a supply zone. Futures oversold, we're looking to buy in a demand zone to get that initial buffer or momentum. Now, futures overbought by 9 points, and we're looking for the gap fill. Okay. Because of the inside day, okay, we start putting all the pieces together. NASDAQ still traveling in this. Yesterday, we had a really good, clear picture of the accumulation during the Asian session. Manipulation lasted most of the, well, almost all of the London session. And just as the London session started to close, it provided a good trading opportunity for distribution. Okay, now I still think we're in that distribution phase, but if we're just looking at the Asian, London, and New York sessions and kind of separating them, we can see that last night that the Asian session was the expanded one and a little so it's not as clear as a picture, clear as I would like it to see, like the one we had yesterday. Okay. And that does impact how traders and trades may play out. Okay. So we'll come back to that. NASDAQ is also an inside day. Globex range inside the prior session's range. Choppier conditions. Gaps often fill the same trading day. Okay. So here's the gap fill for the 5 p.m. close. We also have an unfilled opening gap and a zone and a fair value gap inside of that. Okay, so this is going to be a targeted area if we get a nice or continue with our short trade. Okay, we'll drop down to the small time frame, like a 5 minute. You can choose what time frame works for you based off your risk parameters. And we'll be watching for where we might have an opportunity to splice into the NASDAQ. Okay. Now, with the NASDAQ, I'm fully anticipating the potential of a gap fill. Okay. Price coming down. I will refrain from taking the breakout trades on that, even though it's going to look really tempting. We need a zone entry. Okay. So adjust your charts, find the supply zone. I think we might have another picture of that supply using the leg base. Let's eliminate that. And we do have a supply zone right there. Leg base group of candles. Well, we'll look to participate. 25,856. Okay. And then just plot a line where the gap fill will come into play. Color the lines so you know exactly what you're looking for. Okay. So sometime through the morning session, whether it be earnings or earnings warning or something like that that may come out, I'm fully anticipating price to come back down to the 25,707, and that's going to be like a 130-point move back to the downside. Now, if we can get the 856 entry, okay, we're looking at about a 150-point move on an NQ as we anticipate the gap fill, being that the NQ is an inside day. Now you might go, well, when? Okay. Well, on inside days, the trade opportunities are better after between about 10:30 and 11 o'clock Eastern, just as the London session is starting to close. Okay. So we will keep an eye on that. We're still looking for the potential to gap fill. And I wanted to give you enough evidence to watch why we're anticipating that. Okay. It's important that you verify information, and best way to verify is to see it working with you. Now, our last live stream that we did last Friday, we were able to show the inside day and that all the indexes that were inside the prior day's trading range did fill the gap. Okay. Watching and seeing it happen, talking about it beforehand and watching it play out is very big to build your belief system. Okay, so I did take a trade on the Dow earlier, and taking a little heat. I might jump out of this one. Keep in mind the Dow Jones is also an inside day, and it has more of a narrow Globex range. Now we do take measurements of the Globex range and compare it to the daily ATR. Okay, the daily ATR is an average range of the last 14 candles. Okay, the average price range 506. Today's Globex range is 145. So it's in that range between 0 and 40% of the daily ATR. Again, Globex range compared to the daily ATR. Between 0 and 40%, we're looking for more of a trending market. If the Globex range compared to the daily ATR is about the 50% of that range, between 40 and 70, to be more specific, then we have a lot more choppier market open. Okay. And we still want to wait for things to return to a demand zone or return to a supply zone. Okay. Inside days can be a little more choppy. We expect a gap fill, and we're already seeing that it's pretty much there. Okay. But I did take this off a time frame earlier, a 5 minute. I was anticipating the breakdown, stop in place. Okay. And let's see, yeah, that fair value gap worked. We do have a leg base zone right up in here. 49,678. Okay. So I limited my risk on the trade to what is manageable and won't leave a big impact. There's a lot of profit potential as we look for price to come back down uh, to demand. Okay. And finally to Russell. Okay. Russell's also been one of the big climbers that we've seen this week. Okay. We're seeing that the IWM is only gapping up 13 cents, or sorry, 23 cents. We're seeing a nice little topping pattern. We do have, if you look a little bit behind the scenes, might have to drop down to a 5 minute chart to really get the picture. But when we compare that Globex range or the Asian market range, we can see that it's pretty narrow and sideways. So we are looking for manipulation on that. Okay. Kind of price coming back down to find buyers. I do like this one. I want to participate, but because it's an inside day, we need to find a demand zone or we sorry, need to find a zone to enter the trade. Okay. And we might have to wait till it gets down lower before we have that opportunity. So indexes all an inside day. Remember the rules around inside days, choppy, designed to take your money. Okay. And let's see, I do want to get that Russell set up there. M2K. I just want to have the screen up there. Russell has some moves, but they just kind of come out of nowhere. Okay. And we do have a little fair value gap right down in this range. That'll be one of our first targets. Nice pocket of points, very fast move up on very light volume. These often get retraced. We call them a pocket of points. Well, price does start to move down. We should look for it to move fairly quickly through this area. And we call that a pocket of points. Okay. Light volume price moves often get retraced, but we still don't have a really good entry on this yet. All right, that brings us over to crude oil. As crude has started, the pit session is opening up. We've been open for a couple of about 15 minutes. Okay. Remember, we have a huge amount of supply increase based off of the crude oil report. Okay. That gave us the nice push to the downside. We're at that level now where we potentially could make a lower high pushing down. But we have to remember that we do have the tensions in Iran and things like that around the oil industry. And we're looking at, let's just double check. I'm going to bring up CME Group because about the middle of the month, you want to anticipate and find out when contract rollover is and uh, last trade date. Okay, we should be on the March contract now, it looks like, and I'm on the February. Okay, so I do need to change that. Come on, futures. CME website having technical difficulties. Imagine that. Let's look at the calendar. Okay, we're the 16th. And we're looking at January 20th would be the last trade date. Okay, so that puts the last trade date, looks like Monday or Tuesday. Okay. Now, generally, there are market characteristics, price characteristics that happen around contract rollover, which is today. Okay, where the volume shifts from the front month to the back month. So let's just check the volume. February contract. Okay, yeah, they've already moved to the back month contract in the March, so most of the volume's there. Okay, but today is that contract rollover, and I still have my chart set up on the February contract, so I'll need to change that for Monday's session. The 20th being the last trade date, we often see that traders that do not want to take delivery will see that prices drop because they're getting out of the trade. Okay. But on the last trade date or the day after last trade date, we want to look for price to be in demand. And so if we start looking at how things unfold, each month this happens, we start to see around contract rollover, there's a lot of interest. Newer traders are figuring out what contract rollover is, what contract to trade, and so on and so forth. Okay, so there's a little confusion around that. But last trade date is when the banks and institutions have to step in and either intend on taking delivery or they got to roll out. Okay, selling the front month and buying the back month and so on. Okay. All right, we got market open order imbalance just got posted for the stocks. This will impact the equity indexes. So the Mag 7, where a lot of the large market cap stocks are, we have more of a buy imbalance than a sell imbalance. The Dow 30 and the S&P 500 have a huge ratio difference between the buy imbalance and the sell imbalance. So there's a huge sell imbalance. Okay. Now, generally, when you see the sell imbalance, you're going to look for prices to move up before dropping. Think about it. These are the banks and institutions posting their intentions, and the market open order imbalance is different than the market on close. Market on open, market on close. The market on open, they can put orders out there and cancel them anytime. The market on close, 10 minutes before the market closes, they cannot change their order. Okay, the orders are posted. Okay, cool stuff. I think the banks are closed on Monday and futures might still be trading from the Sunday night session. Okay, we can verify that as well. Okay, but remember the futures follow the cash market. If the cash market is closed, okay, then it's going to be a little more difficult to trade the futures. Okay, we utilize all of that information to help us understand that trading environment. Natural gas, got to reach out, Miss Fay. Great job. That was a beautiful entry as price broke the support, came back in. We got the gap fill. I mean, we may not have stayed in it all day, but it had a nice solid move up. I'm not sure why this one is not set up here. Oh, most of it's set up. I just had to make a few adjustments. So good job, Miss Fay. You've been doing spectacular on your entries on trading nat gas and crude oil. Okay, so we do have a support level that nat gas is at. Has broken it. Okay. And we're right back in a fair value gap area. Just tagged it the second time. Okay, so we'll look for it to go a little bit lower. But I left that on there because I wanted to give you a shout out for doing a good job on that. That was one of the trades we participated in yesterday. Okay, it looks like nat gas is moving lower at this point. And in observation, you might see that nat gas has been moving lower while crude oil moving higher. Okay. Those are notable pieces of information to kind of see inverse relation versus when they correlate and when they're inverse related. Okay. So notable around when there's war or destruction going on in the Middle East, okay, where a lot of the oil is still produced, we do see some inverse relation between natural gas and crude oil. Okay. And when things are peaceful, we tend to see them correlate. Okay. So those are things that are very notable that should be part of your how you incorporate into your trade plan. Now, I think there is a leg base down here, so I'm going to come and take a look at that. Yeah, it's right down. I thought it was up a little bit higher, but it's right in there. Okay, so we got a potential, some demand, maybe left around that 3.0, $3.3.05. How's that? Okay. All right. Gold in a channel. You can see for the last 4 days now, it's been going pretty much sideways. Okay. This is an accumulation area. Sellers, buyers, they get them trapped in between. Often this is an environment that's very difficult to trade, and if you're taking trades inside this range, you have to give a much wider stop, and sometimes you're taking on a lot more risk. Okay. What we want to see around the dead space or around when price is hitting resistance or support is we want to look for, just like on the natural gas trade, we want to look for an accumulation area or a buy territory being created below the support or above the resistance area for best for a nice trade opportunity. Inside this area is going to be a little more difficult trading. Okay. All right, we're about 5 minutes away from market open. Let's get out there and look at our exchange traded funds. As mentioned in the pre-market routine information gathering part, we need to see what type of gaps are occurring with the exchange traded funds. Okay. If you have a breakaway gap, often price fills about halfway through whatever that gap is. Okay. A breakaway gap is when price gaps away from a short-term trend. Okay. There's runaway gaps. Okay. And or what they call it technical term is measuring gap developed by H.M. Gartley. Okay. The measuring gap is generally when price goes sideways for a period of time, then gaps up. And we refer to it as a runaway gap. Okay. And then there's the exhaustion gaps. Exhaustion gaps are within a trend. So if price is trending up and price, then you have a gap to the upside, or price trending down, we have a gap to the downside. Those are usually exhaustion gaps. They occur near the end of an uptrend or end of a downtrend. Okay.
Order filled.
There's signals that we watch for. All right, what did we get into? We just got in our 10-year. Okay. So coming back and looking at that trade. Is it the 10-year? Nope, I got stopped out of the Dow. I think the Dow was moving up a little higher. Yeah, that was it. Okay. So we'll continue to wait just a little bit longer. We do have a supply zone on the Dow. Up there around 49,687. Okay. Okay, so from our prep screens here, we have I want to keep a close eye because we did see some other discrepancies. Early in the pre-market, the dollar was going down and the 10 and the 2-year yield were moving up. Okay. There's going to be a lot of drama around the yield prices, bond prices, and such. Okay. Now, if the 10 and the 2-year yield are moving up, we often see that the 5, 10, 30-year bonds and notes move lower. We're also looking for a lead indication on the US dollar. Is the dollar moving up or moving down? When we have an inside day, very often the dollar is not correlated with the 10-year and 2-year treasuries. Okay. When that occurs, that is also another signal, a red flag that we need to wait for them to get correlated before having a good trading environment. Okay. I want to be clear on that. Document this yourself. I use an hourly chart. Let's bring that back out to an hour. Okay. And when we see the dollar moving down while the 10 and the 2-year yield are moving up, we want to understand that the conditions are a bit more rough, choppy, whipsaw, and may not give us the desired trade outcome. We also look at this information across the board saying, hey, you know what? Short-term trading on an inside day, I mean, taking profits quickly and smaller profits until we break outside of that range and get a trending environment. Okay. Yeah, there's a lot of drama going on outside the price market or outside the price charts that we need to keep an eye on too. Canadian dollar did have that accumulation, and now we're looking at a manipulation phase as it drops out of that sideways channel. Okay, we're looking for gold to either break to the upside or break to the downside for that manipulation. Remember, the first move out of that generally lines up with a leg base group of candles. Okay, and then we look for the price to move back up. And when price does move back up, we want to look for it to break above the accumulation area. Corn is also in the same camp, has an accumulation. All right, so let's look at what we have to do for some trading here. S&P inside day still, we're looking for the potential of a gap fill. We're looking also for a zone entry. Prices on a 20-minute fair value gap. Let's see if we have anything on a 5-minute chart to utilize to get into a trade. Now, everybody can ask questions, okay? And as I'm putting things together, voice what you see, okay? If you got some information about that I might have overlooked, I welcome it, okay? I don't have all of the answers, okay? I look at doing the live trading and the pre-market routine. It's basically information gathering, but I don't always catch everything. So we like to share information, and it's like a community. We all have different things that we're looking at. And let's see. Now keep in mind, a fair value gap is not a zone entry. It is a place to enter when markets are trending. Okay. And what I'm plotting out here is a fair value gap. What I need to find is a leg base group of candles. And that's still up above. Okay, so plan looking for an entry just above that 7,010. Okay. Let's get over to the Russell. I think the Russell is going to give us a good opportunity. Let's drop down to a smaller time frame. Yeah, we're looking at that manipulation, but Russell's still an inside day as well, and we need a leg base zone for an entry. And while I'm getting antsy, because I don't want to miss this one. I think we need to get that 26.94.70. Oh, it's so tempting just to jump in, but we know that breakout trades often fail. So when you know that breakout trades often fail and you're trying to get into one, I mean, just like I'm feeling really anxious, like I'm going to miss this whole move. Okay. Want to get the breakout, which would have just occurred there. Okay. But it's really risky. If you do take the breakout, give yourself enough wiggle room. I'm going to look for an entry around 26.94.70. I probably would have chased the breakout, but doing a class keeps me on my toes. Got to follow the rules, right? All right, placing an order up there. Now, how you trade is how you trade. I'm just trying to keep myself out of getting chopped up taking a breakout trade. Okay. Once we get our breakout trade entry, we'll have a stop loss at about 2,700. Okay. And we'll look for that first target about 26.71. Remember, it's an inside day. Crude oil, chopping sideways. Another observation is that the Globex range is about $1.25. Okay. And the daily ATR is $1.91. So we're kind of in that 40 to 70% range. Okay. We are contract rollover. Okay. We might see a lot more choppy sideways conditions on crude oil. Natural gas, price broke support, has not reached demand. 60-minute chart's been trading in a sideways range. Daily chart is in a downtrend, but it did fill the gap yesterday. So we are anticipating on a small time frame, maybe a double bottom to come into play. Okay. And often a double bottom, when you're using Fibonacci measurements, can range about that 88.6% retracement. So we're not back down to demand yet. No, 3.30, so yeah, so that'll be back down in this range. Okay. In order for price to get down there, we'll see if price gives us an entry to go short, 3.119. Push it down, or we'll look for the opportunity to go long. I'd run this range. Oh, Russell getting away from us, isn't it? Now, one of the things to keep in mind as new traders, When you start getting a little emotional, the market's gotcha. Market gotcha. Oh, the YM? Yep, we gotta get back to that one. Swing. Wow. Did you get a short? I didn't have an entry on that one. Quite the whipsaw, and price coming back down to support. Whipsaw, market conditions, are we still an inside? Well, actually, we're now an outside day. No, we're an outside day on the Dow. So we can take a breakout trade. But I want to stay out of that whipsaw for right now. Now we see our IWM might come back down to 262. We just got to find a way to get into it. Diamonds. Wow, nice strong resistance at the all-time high. That's usually not bearish. Okay, when you have multiple touches like that, the traders are more willing to try to take a breakout trade to the upside. Okay. But as price does come back down, let's locate the leg base at the origin of last move up, where it might continue to make that channel. Qs and diamonds, oh, sorry, Qs, spies, diamonds, all still right near the new, actually, Qs are a little bit further away. All-time high is up a bit higher. Anybody get the Russell? I had to stick with my trade plans. I was going to go for it, but I waited. That was a great breakout trade, but it was outside my trade plan rules. And how we don't like staying out of our trade plan rules. All right, let's look around. S&P chopping. NASDAQ, a lot of whipsaw. NASDAQ still an inside day. Yep. Remember, NASDAQ, sorry, is looking for the gap fill.
Order filled.
S&P. Dow is right back there at that support as well. Dow's an outside day, taking the breakout. And we're looking for demand. First target, 49,424. Also noticing that we do have a big pocket of points right in that range there. A lot of whipsaw. Inside days often provide that good whipsaw market conditions. And we got the boring little trade over here on the 10-year. Okay, so I have one contract on the 10-year that came up and hit the fair value gap. I dropped down to a 30-minute chart so I could manage my risk. About $234 risk on the trade. I'm actually using the 240-minute chart breaking out of that sideways channel. Okay. So we had accumulation since the beginning of, well, look at that accumulation sideways market since January. We're in January 9. Yeah. Price has gone sideways. So we're looking for manipulation. And there was a small opportunity for price to break out of that range. Looking to come back down to demand. Okay, so Russell on a 20-minute chart is making a fair value gap at the moment. The Dow is starting to break down a little bit. Now, market conditions around an inside day, okay, are a bit volatile like this as we're seeing it. Okay, the volatility is going to bring in a tremendous amount of emotions. And emotions are something that we must incorporate into our trade plan because we spend so much time on our trade plan looking at charts and looking at past successful trades that the emotions are pattern recognition, your pattern recognition software. Okay, that with that pattern recognition, when the picture or the trade is not there, that's when the emotions get the highest. Okay. All right, looks like Russell's coming back up for us. 5-minute chart. We got drop down to the 5. And get ready to participate in the Russell. Just hit the fair value gap. I have to take a small position because my stop loss will be up at the pivot high. Okay. Just kind of watch it. Actually, yeah, nice. There we go. Okay, I'll take this on the way back down. 2687. Sell stop market. And if filled, as price comes back and breaks that area, then my protective stop loss will be here. Now, if price comes back up to our leg base zone, even better. And the stop loss will be at that 26.99, 2700. And it's canceled that one. Let's get this one in price 26.95. Where I'm gonna, sorry, 94.70. And my stop loss would be at 26.99. I'm looking. We're still in our 10-year. That must mean that the dollar is getting a little, well, the things we talked about earlier where the dollar going lower while the 10 and the 2-year moving up is telling us a lot. Our market conditions are going to be a lot more whipsaw and choppy. Zone entries only. The inside day is just another piece of information that market conditions can be a little choppy. Okay. And we're seeing the choppy market condition. Let's take a look at that 30-year.
Order filled.
We got the Russell. Let's get back over there and set our stop loss. And price at supply. Coming up strong. Wow. Got 99. I'll give it a nice even $50 risk. Okay. Now we are looking for our profit target down here. And you can see that this is much greater than a 1-to-1, 2-to-1, 3-to-1. We've got pretty sizable profit margin. Okay. Now we will add on to this position once a new fair value gap presents itself. If we get, because we just made a lower high and we had the leg base group of candles. Okay. Lower high, are we going to make a lower low and continue the downtrend? Okay. At a place to manage our risk, we started off with small contract size. If we have a large profit margin, we don't have to go with a big position to get down there. Okay. Our max risk on this trade is $50. Okay. We will have more opportunity if price is going to go down to our levels, which we're anticipating 2671. There will be opportunities to add on to that. But in the first initial trade you take, you don't want to take a lot of risk. Okay. Because usually your entry, you have the potential of not being right. Okay. And that's why you have your stop loss. As new fair value gaps set up, we will have the opportunity to adjust our stop and add on to our position. Okay. Right now, there's nothing to do except for wait for the charts to give us information, either take our $50 or start building on that position and adjusting stop loss, trade management. Okay. Just came out to the larger time frame so that we can get an idea where price is at right now on the larger time frame and what that picture looks like. It's important once you take a trade, go out to several larger time frame pictures and kind of look at the area, look at what you're anticipating to trade within. Okay. It's not that you're looking to add on another trade. We already have that trade management in place. And here comes Dow coming around the far outside, pushing lower. Okay. Nice entry on the Dow. Nice pocket of points. Dead space. Yeah, we're looking for 49,153 on the Dow. has a profit target, but it may take a little bit to get a fair value gap and pushing price lower. NASDAQ. Okay. NASDAQ has not, I mean, it's just doing what we saw yesterday, after it just really choppy. So we started off this session by understanding that some of the equity indexes are an inside day. Inside days are choppy, whipsaw, lighter volume. Okay. So we knew these conditions were upon us. We also knew that the NASDAQ had the biggest potential for the gap fill being an inside day. Okay. Globex range inside the prior session's range. Okay. Now, all of that information does not provide us with a trade where we can manage our risk yet. Okay. We drop down to a smaller time frame and we start looking for either a zone entry, since we're still an inside day, or we're looking for a fair value gap, as we're looking for price to come down and fill the 5 p.m. close. Any questions? You guys getting all of this? All right, let's look around here. We got crude oil. Now, with all the things going on over in Iran, crude oil production may be on the back burner. So that can impact how supply and demand work. Okay, but we are around contract rollover as well. Nat gas doing a whole lot of nothing. Exchange traded funds, we have the Q pulling back, looking to fill the gap. Diamonds still building that channel, looking for 490. Looks like corn is still inside the what we call the dead space, but accumulation. We're going to look for corn to break out, manipulate to the upside, or break down and manipulate to the downside. Same with gold. Used to break out of the range. Swiss francs in the supply. Canadian dollar still manipulating to the downside. British pound as well. Japanese yen has a lot of news around it that over the weekend, and things should get spicy with the Japanese yen. Okay, way that they're adjusting rates and so on to better off their country. Dow just tagged a fair value gap on a 60-minute chart at 49,519. And Q continues to push a little bit lower. And one. Let's watch that area. Yeah, 614 for the NQ. S&P pushing back, Russell dancing back and forth. And you probably have a bunch of novice on Bitcoin saying, oh, there's the head and shoulders pattern. Okay, so be watching for Bitcoin fluctuation. Novice traders. And Russell's still working. Beautiful entry on the Russell. $50 risk. Okay. Now we're waiting for a fair value gap to form, and we know that if we're using a 5-minute chart, we're working on the second candle right now. We got a minute and a half left in that one. We will still need another 5-minute candle to help us with that. How many took the $50 risk on Russell? Anybody? Nice job. Nice job. Now, $50 risk is not going to break the bank. It's not going to blow up the account. Okay. You can sit back and just kind of say, okay, I understand what the risk is. I can adjust my risk once price moves 1-to-1 out. Okay. I can drop it down to maybe a $10 risk. Still looking, keeping your eye on the price, down to 2.671. Let's go to a larger time frame and see. Okay, yeah, we do have the unfilled opening gap. I'll expect a bounce about 2.671 area. As price starts to go through that pocket of points, we'll look for things to keep slipping through there. And yeah, so we got a target 1, and I would love to see that unfilled opening gap get filled today. Dow, we just made a fair value gap finally. Now, who can tell me when fair value gaps are used best? Is that in a reversal or trending? Is the Dow an outside day yet? Yeah. Yeah. So if you didn't get the shorts, that's okay. We know price is looking for buyers now. Okay, got about 3 minutes, 44 seconds for a fair value gap to be created. I put the indicator, the time remaining in a bar, because this helps me manage my expectations. Okay. So still about 3 minutes left to form that fair value gap. Now, once that fair value gap, and we see the difference between a leg base, and a fair value gap. One's at the reversal point, one's trending. Okay. We had support, price broke support, came back up and found the sellers in the sell territory. Okay. All right. So how are we going to plan to manage this trade? Well, if you're not in, we're going to wait for this candle to complete. Then we'll look for an entry at 2.68930 cents. Okay, I'll add on 1 micro at that point. Okay. Or if you're just going to stick with the original 2 that you took, okay, with a $50 risk, then once this fair value gap completes, okay, you need this candle to complete and then retest it. Once it starts to come back out of there, you can adjust your stop loss. Remember, we have $50 risk on the 2 micros. Adjusting price down to this range here is going to take almost all that risk off. Or you can take the profit and do the happy dance. We're still inside days, okay? Let the candle complete. And due to the whipsaw conditions, it may go back like right now and fill it so we don't have a fair value gap anymore. That's the importance of letting it set up. Wiped it out. Usually if it wipes it out and you're anticipating, don't get disappointed because that's just keeping you out of harm's way. Market's still not trending to the downside. Even though we have a majority of the setup, it's just whipsawing back and forth. What conditions or what did we have this morning that said, hey, we expect that? Okay. It's the inside day. All right, we see the trend is in the neutral area. We see the VIX is flat. We see that there's more declining issues over advancing issues down here. Okay, but we're just outside the no trade zone. We have not had a buy program or a sell program today on the composites. Okay, so we're not missing anything. The banks and institutions are not stepping in with a big buy program or a big sell program. It's just been chopping back and forth. We haven't got to any extreme levels yet. Now, a lot of things that I'm describing right now, again, we're just looking for that information that we can verify with different indexes, different pictures on the price charts, and so on. Okay. We're looking for information to help us gauge these market conditions, such as the inside day, and build expectations around it. Okay. Now I'm going to risk my full $50 on this trade. If you fail to get into it again, you could look for, and I think I'm going to add on to that position as it comes back out. What clue, for those that have taken Mastering the Chart Part 1, what clue is over here that the zone can be used twice? First is a proximal line entry, second time price goes a little deeper into the zone. See, in Mastering the Chart Part 1, we tell you how and what to look for that. When a zone can be used twice. $2,694.70. A lot of whipsaw. Okay, the 30-year on the 30-minute chart has also just come back up into fair value gap. Okay, so we're trading the March contract. US H26.
Order filled.
Stop loss. I know these are kind of slow and boring, but that's, we're staying away from that whipsaw and the other markets. 116, 4/32. Oh, did you get that one, Miss Fay? I was off looking at something else. Dang it. Nice fair value gap. Got an entry on the nat gas, pushing it back down to where we want to go long. Euro stocks. Okay, Apple, Broadcom, Meta, Amazon. Yeah, the stocks have kind of slowed down a little bit, kind of a lot. A lot of really small candles going on here. All right, let's go take the Dow. I'm going to take it as it comes back out of that fair value gap area. 49,568. And stop loss 49,665. Uh-oh, I'm gonna risk our $50. You have anything up above it? Nope. Oh, back down, back down. Oh yeah. What's that old saying? There's no adventure is any fun without a little bit of danger.
Order filled.
We just got the Dow. I'm gonna adjust my stop and keep my stop pretty tight on the Dow. 49,607. Now that missed us by one tick. So if you didn't like that, you can get out now, or you can just say, you know what? I stood my ground. My stop loss was in place. I didn't move it. Okay. Becomes a choice. Watch the time. Man, came within one tick. Now we're going to look for another fair value gap to add on to that position if it occurs. Here comes Dow coming around the far outside. Oh, nice job, Miss Fay. On the net gas, you took the leg base, leg base. Boy, that was a big one. Wow. Nice job. Beautiful move. I'm set to add on, if price does come back and go through this area, I'm set to add on one more micro contract there. But trust your feelings. If it made you feel really uncomfortable about that, taking that stop or leaving your stop alone, you now reduced that loss by 50%. Maybe you want to step aside. Have a plan. Have a plan. We were expecting these kind of market conditions right from the start. Inside days, inside days. Oh, we almost got the gap fill on the NQ. And you said it was never going to happen. There we go. Let's get out of that one.
Order filled.
Inside days, gap fills often the same trading day. Got the
Order
gap fill on the
filled.
S&P. Russell coming back for us. Got the Dow. Where's the gap fill on the Dow? Already did it. So they're looking for buyers on the Dow down a little bit lower. Nice job. What about crude oil? What do you think, Callie? It'd be a little tricky with crude oil because any news could be a little more risk on it and contract rollover. But on the February contract, we just came back into the fair value gap. And we'll look for nat gas entry down below. Right about that $3.03. Looks like corn's about to break out to the upside. Let's take corn. Now, you might find, why are we trading such a lot of, so many different things? Well, they all play off of each other. And, there was a significant drop on corn. I think we're near contract rollover as well on corn. Um, let's get the style there. Now, this pattern, you may say, well, that's a drop base drop. Okay. Usually when you have that big of a drop, you're going to get a price bounce on it. Example, just take a look at wheat, the big drop. Notice the basing and the breakout of that. Okay, came back down, found demand because it was building demand. Okay, now corn stopped going down because it's creating demand. Okay, now if you prefer taking breakout trades on corn or any product, really, okay, they often have a little more risk. So look at the buildup prior to the breakout. Now, a lot of traders are going to be looking to take the breakout, okay? And I think we'll look at that too. We've got the March contract, so that's going to be C, the letter H, and 2-6. Okay. If you choose to take the breakout trade, you're going to use the beginning of this move just before the fair value gap as your protective stop loss. Okay. So you need to know that dollar amount in order for that trade to fit within your trading plan. How many contracts you will trade. If you feel very confident about taking the breakout, fantastic. If you want to see price breakout, then come back down to the fair value gap. That would be the next opportunity. Okay. But at any rate, as we start off with this, whether you're taking the trade at the fair value gap at 423 and 2/8, okay, or you're taking the breakout as price is approaching the breakout at 425, have your stop loss order in place and see, does that fit within your trade plan as far as risk on a trade? Okay. 425, buy stop market, stop loss, 421.48. How much does this pay per point? How much does it pay per tick? Go out to the CME group if you don't know. So don't take a trade unless you know about the product. Oh, if you didn't like the way the Russell was treating you when it came up to your stop loss, you can get out now. I think we did have that on the recording that we came within one tick of being stopped out. NQ broke down. Okay, so we're looking for the NQ to fill that unfilled gap. We have a demand zone and fair value gap. So there's several places here indicating some buyers. We have leg base. We have fair value gap. And so I would suspect there's going to be a lot of activity around that level. Now, at this glance right now, we could say, okay, let's plan for it. Okay, so if price drops into that area, we want to see the unfilled opening gap. I really like the fair value gap entries. We look at this area, we have a price range about 25,608 to 607. Okay. Now that is the price range where I want to go long. And I will look at my protective stop loss at 25.68. Okay. I may start off with just a couple of micros. Okay. Notice the strong drop we had over the last couple of days. What did they do? Okay. Strong drop. We got a good, nice sizable retracement. Okay. So placing that order out there ahead of time may or may not get filled. Let's find that 25,607. Start with small contract size. Put your stop loss at 25,568. Do not exceed your risk that you've established based on your trade plan. So you could start off with just a couple of micros. Okay. Dow's coming back up to our stop loss as well. A lot of whipsaw price action. And we're approaching the bottom of the hour, and we still got about 30 minutes uh, before the 11 o'clock when the banks and institutions have completed their order flow. Oh, yeah, we do have our next session will be about an hour after we're done with this one. Okay. Our next session is mastering the charts recap and review. Okay. The team had to work really hard last week to collect a lot of notes on some of our sessions that we had. So it's going to be a good review of our past live trading sessions, trades we've taken, and more importantly, are the notes around it. We're still putting on the schedule when we do the, I think it's going to be in February. We haven't officially um, put out the marketing for that. But for the pre-market routine, all the information that we gather, how we follow up on that, how the training process is to understand what's outside the price chart, as well as what is on the price chart. Okay. And mastering the charts recap and review, you can come back and verify information on there to help you confirm and verify information on the price chart that can be very useful to understand the trading environment. What we did today in understanding the trading environment was we understood it was an inside day. We understood the parameters around an inside day. Understand that gaps feel often the same trading day on an inside day. Utilize that information after we verified it many times. Okay. And if you notice the picture up in the corner with the Qs are just making a ascending triangle, and we're just before the breakout area. Okay. So as this ascending triangle keeps forming, this is a form of a continuation pattern. Okay. So where would be a good place to attempt a long? manage your risk. Because even Aunt Martha can see that that is an ascending triangle. Okay. And I don't have an Aunt Martha. But the mom and pops out there can see that. So what would they interpret that as? Bullish or bearish? So in about 1 hour, we will start mastering the charts, recap, and review. If you'd like to sample that or just check it out, just reach out to the team. If you have not participated in one of those, reach out to the team and maybe we can get you in for a session. Okay, that's admin@themarketinstitution.com. All right, what trades are we in? Okay, we are negative on the Dow just a little bit. We're back positive on the Russell. A lot of drama around the Russell today. Came within 1 tick of stopping us out, right? We had a little drama on the Dow as far as getting close to our stop. Important to put your stop in the right place and very important to understand to properly size the position so it does not exceed your trade plan. Okay. NASDAQ, we're still looking for a trade, a long entry around 25,607 area. Our stop loss at 25,568. An opportunity could be that as price comes in here and turns out, okay, maybe you want a little more confirmation. Okay. Also, a special note, this area, what else is there? We're looking at right where the 50-day moving average is on the NQ. Often the 50-day moving average gets defended. Okay, if it starts going below, closes below, we can anticipate a little more downside coming. Okay. So I guess we'll wrap up our session for today. Wow, look at the gold coming down. Manipulation for sure. Did we had that on our watch list, didn't we? Or we got Bitcoin coming down. Yep, gold is manipulating to the downside. So we'll look for a leg base below that support. Put the studies on there. Yeah, it looks like it's right there about 44.87. We have a fair value gap in between there. Yeah, make sure that your demand zone is in a sell territory, or sorry, below a resistance area, and in a buy territory. Okay, might find a little bounce. 4,500, 4,544. And we'll look for more of the trend to change back to the upside. 44.87. There's a lot of things that we talk about and utilize in our live trading room. Okay. If some of these things just don't sound familiar, they don't look right, please reach out. Oh, we do have another setup on corn. I believe we haven't taken that trade yet. Yeah, we have a breakout trade on corn set up and potentially a fair value gap entry. Okay. First target on corn should be the opposing fair value gap. So we're looking at about 49 and 429 and 2/8. So somewhere up in that range there would be a nice little target on the breakout. Okay. But back to my question, if you have not taken Mastering Your Charts Part 1 and Part 2, okay, engage with us. Okay, find out what we can do to help you get the education, put the pieces together. Okay. Whoo, here we go. I almost don't want to end the session. It's starting to look really good. How about our Russell? Are we still in that one? Yeah. Everything's turning green. Nice. Even our 10 years turning green, our 30 years coming back. Beautiful. So we'll follow up with this in the Mastering the Charts recap and review. Wish you guys a happy Friday. Understanding when we start off with an inside day that we got to wait a little longer before our trades really start playing out and the trend really sets up for us. So we know better not to overtrade during that inside day. Okay. So I wish everybody a happy Friday. Hopefully you stayed in that one. Who was in that one? Let's see. Shelby, did you stay in that Russell trade? Nice job. Nice job. How do you feel now? Feel invincible now. $50 risk. We got a 4-to-1 right now. We're looking for much greater. We still don't have another place to add on to the trade yet. But having the rules and putting things together, fantastic. Yeah, do that happy dance. All right, we'll see you guys about an hour, and we'll follow up on our trades here. Have a great day.